Hi everyone, welcome to this version of Prestige Wealth Perspectives. In this episode, we will be covering the timely topic of capital gains taxes. Now we are at the end of the year and taxes tend to be at the top of mind for investors. So today we'll be talking about capital gains and how they affect your after-tax accounts. So when we talk about capital gains, there's really two types of capital gains that you can see. The first kind is really a good kind. It means that you're making money or making a profit on your investment. So again, these are in after-tax accounts. We look at what you paid for the investment, and if that price appreciated or went up, the difference from what you paid and the price you sold it, that will be subject to a capital gains rate. Now, depending on how long you held the investment, if you held it for a year or longer, then you will be subject to long-term capital gains. Now, that is more favorable, and depending on your income level, that can be 0%, that can be most likely 15%, or as high as 20% for our high income earners. Now, if you hold the investment less than a year, it'll be subject to short-term capital gains. Now, this typically is the less favorable tax treatment, as those gains will be taxed at your ordinary income level. So again, capital gains, it's usually a good thing because it means you're making money, that your investment appreciated, but it is important to consider whether it's a long-term capital gain, a short-term capital gain, and what that looks like for the end of the tax year. You can also offset gains with losses within your portfolio. This is often referred to as tax loss harvesting. So that's the first part of capital gains. The second part is what we call capital gains distributions. Now, these usually come from mutual funds or ETFs, which are exchange traded funds. So what typically happens, those are a pool of stocks, bonds, all kinds of different types of investments. And as those portfolio managers go through and make trades throughout the year, they rebalance the portfolio, they buy and sell stocks and the other investments. When those investments have capital appreciation or gains, as we just talked about, they are required by law to distribute 90% of those gains out to the investors. So again, whether the market's up, down, sideways, when there's gains within the portfolio that have been sold off by the portfolio managers, those distributions will happen. Now, a lot of our clients will reinvest their dividends or those capital gains distributions. Regardless if you take the money or if you reinvest it, you'll still be subject to capital gains. So it's important to have a game plan in your after-tax accounts, especially this time of year when we have tax at the front of our mind, to really be tax smart and review your investments and make any adjustments before the end of the year. Again, thank you for joining, and join us next time.